Hello and welcome to Exchanges for another week. The AI revolution is entering the next phase, which is the investment phase and the listing phase. But that also means the speculation phase and the trading phase. And so with all of that in mind, where and how are investors getting involved with it? And what do they see the future of AI investing looking like? That's why I wanted to get in Peter Petrov, who is the senior market analyst at MyTrade. And on MyTrade, they are now our new sponsor of the show, and that is a multi-regulated CFD trading platform founded here in Melbourne that lets you access over 900 financial instruments from gold to Forex and indices and everything in between. Please be aware, though, that CFDs carry a high level of risk and may not be suitable for all investors. And please consider whether you understand how CFDs work and whether you can afford to take a high-risk investment and lose your money. The AFSL is AFSL 398528. They are our new sponsor. And with that, this is Peter Petrov to discuss the AI revolution. Petrov, welcome to Exchanges. We are entering into the next phase of the AI revolution. We know we're about to go through a big set of listings. The market has been trying to invest into this space very, very strongly since 2023. Let's go back then to that. Do you feel that the investment, particularly over the last 2.5, 3 years, is now getting a little bit bubbly, or are we still at the very infancy of the AI revolution and the general investment that it's going to create?
Hi, Ivan. Thanks for having me. It will be. I hope it will be a quite nice discussion, like in the coming few minutes about the environment, about the market in general. So, thank you for the question. So let's kind of. I would like to try to lay out the whole, my whole framework of thinking about the current situation, how AI investing will work out in the future. I mean, of course, we cannot predict what will happen with AI and so on, but for me personally, the way how I try to tackle this topic is more like trying to see certain historical comparative situations in the last 30 years. And I would like to kind of throughout the discussion that we're going to have, I would like to kind of also give examples from back in the time in the late 1990s, during the dot-com bubble, which ended up in early 2000. And also I'll also give some examples from the 2010s, the last decade. And because we also see economic and investing in AI in investing in tech in general. For example, in the 1999, during dot-com bubble, of course we know what happened. And then during the 2010s, we saw increased investing in software stocks. So if I have to answer the question, are we going to a bubbly territory? I would say maybe yes, but not there yet. And I think that's probably a very probably you can hear this answer quite often, because I try to dig some deeper into history, back in those periods, late 90s and 2010s. And I try to see certain elements, and I want to see if I see them here in our current stage of investing. And if I have to compare purely, because people often compare the dot-com bubble with nowadays, and if I want to compare it purely that period versus now, I would say back then was much worse. The situation back there was pretty kind of uncontrolled, because I think I'll mention several factors. First of all, we nowadays with all these major AI players, there is actually quite, again, we can observe that we have companies that are stronger financially than 30 years ago, than in the beginning of the millennium. And we see that mostly because a lot of these large AI hyperscalers like Google, Meta, they have got a lot of cash, and they have a lot of funds that they can invest from themselves. So basically the whole investment horizon for them is much longer, and they have also a lot of money to spend. So for them, when they spend this money, it's not like they borrow them. I mean, right now we start to see these companies are trying to tap into the equity markets, with just with how we see with the Tropic IPO and with OpenAI IPO in the coming months. But it's not there yet, that because in 1999, 2000, the whole idea was basically all these companies, I'm just a normal company. I put .com on at the end of at the end of my company name, and then I go for IPO, and then I raise money with very, very high valuation. And I think this was very kind of like systemic kind of like pumping up stocks back then. Something that we still don't see at this moment in our current age. And also we have to mention the fact that back in the days, it was much easier to list on exchanges. Like it's much easier to raise capital back then. And now, even nowadays, like there is a lot of VC money, but for AI companies. But I'll say that nowadays it's more like still there is certain level of pickiness from VC firms when it comes to investing in AI. And yeah, I think that's one thing. Second thing I'll say about like overall about the situation back then versus now is like I'll say the interest rate environment back then was a bit worse than nowadays, because like the dot-com bubble reached its peak somewhere around like the first quarter of year 2000, and actually like at that time the Fed was already in like an interest rate hiking mode. Like they start hiking interest rates mid 999. So I think in this sense, like nowadays we still don't see this kind of happening. Not yet. Maybe we will, but yeah.
So can I just on that, because that's a sort of interesting point, because there has been that big comparison between what was happening in the lead up to the dot-com bubble, the money. I completely agree with exactly what you're saying around the difference this time around is that the players in the AI space are the gorillas. They're not some startup or a guy with a laptop on his lap. It's actually the money there. But you just raised something that I think is fascinating. I just want to go a slightly bit further into it. You talked about the Fed in 1999 was raising rates. In fact, it raised rates all the way through to 2001. There is signs, it's only small signs, but there are signs that the US could be about to start seeing rate hikes. Not maybe as much as what we did through 99 through 2001. But if we did see the Fed shift and we saw one, maybe as much as 3 rate hikes in the US, would you suggest that we could see something similar, because the AI revolution has been done on pretty easy capital markets, pretty easy flows? Therefore, could we actually get a history repeating itself because the Fed actually puts the brake on capital?
That can happen. Maybe I would say if it happens, probably. Okay, so for me, like the way how I see like AI development is not like it's not a straight line. I do admit that I believe at certain stage in the coming years there will be some sort of AI winter. So for me, I don't see the development of AI investing some sort of like a straight line. And I think like there's a lot of reasons to think that, for example, that if like AI like will face some sort of like kind of obstacle. For example, it can be from regulatory, it can be from the Fed, it can be from from maybe like Democrats. They may want to don't want to be very supportive. Maybe also there's going to be a lot of backlash from society when it comes to job loss and so on. So I think back in the days, like when you talk about like that period, like second half 999, when they start to raise interest rates back in America, I would say that even at that time, like this didn't spook investors, because like that time investors were still kind of like certain that, okay, like we're gonna have more like more expensive borrowing, sure, but like as long as we can justify this kind of like as long as we can make more like return on investment in that period, then should be fine. Then interest rate hikes will not be problematic. So for me, it's more like whether nowadays at this day, like at this moment, like it's more about whether like these big AI companies like hyperscalers, can they justify, like can they bring ROI high enough to justify like high interest rate environment? So actually
so that's the next thing, because you talked about Anthropic and also OpenAI just before. They are, as you and I talk about this right now, both of them have now officially done, their confidential listings to the SEC. That means that probably in the next 3 months, both of them will be on the market.
Yeah.
Getting back to your central thought there then is part of the reason they're rushing to market to beat that inverted commas winter, to make sure that they can extract the incredible multiple values that they are. Because they are, as you said, the return on investment is absolutely staggering when that figure looks at it. Both of them have, not just talking about hundreds of percent in growth, we're talking thousands of percent in the growth for something like Anthropic. Do you think that's part of the reason they're racing to market, is to lock in that value, and therefore investors are chasing what looks like a 1999 to 2000 period where the crash in the dot-com bubble didn't really happen to the end of 2000, started 2001.
I think yes, that will be. I mean, that's actually kind of like yeah, it's a good sign that okay, like we're trying to get the highest. We try to kind of like raise money at the top of the valuation cycle, and that yeah, for them, yeah, that's quite the case. But I mean, if I have to also be, but a high valuation itself should not be just like a warning sign for something gonna happen. Because like, I mean, I'll give example, let's say from 2010s. A lot of these kind of companies, like back in the days, like all these kind of like software companies in 2010, like 2015, that period, they also have very high valuations. And many people back then, they have some doubts and like thinking, oh, how can, let's say, maybe Uber or like Airbnb or how can they make money like long term? So there was a lot of doubts, and they also have very high valuations. And I think back then what investors were looking at that time, and I think what investors probably still look at, is like growth. Like if they see a revenue growth growing like a very super hyper scale, like quickly, then they'll be okay. But once they see revenue growth or like kind of projections about revenue growth slowing down, then that can happen. Like then this can be like quite bad for their whole narrative.
So that's therefore let's bring on the next part of the discussion, which is NVIDIA, right? So we've talked about the AI side with the software, which is, your Anthropics, it is your open AIs. The discussion about NVIDIA is clearly exactly what you just spoke about, which is the astronomical impact that it has had. It is now the world's largest company. It's worth $4.5 trillion. It's made Taiwan the center of the universe, is according to Jensen Huang, the CEO. Do they get to top out? Because they're an infrastructure side of the AI story. The chips that you need to make the AI work, the data centers, is all based on using GPU systems coming from NVIDIA. Are you worried that they're the first sort of crack in the whole story, that once you start to see NVIDIA see a slowdown in revenue, therefore not being able to justify that return on investment and starting to slow down all of its producing scenario, is that your, I'm not going to say canary in the coal mine, because it's not that. It's obviously the biggest company on the planet. But is that what you're seeing investors waiting for, is whether or not there will be a crack in the NVIDIA story that has been astronomical to this point in the cycle?
I mean, there's certain, yeah, those who are kind of skeptical, or those who are like the bears, when they talk about NVIDIA, they always mention the whole idea about like circular economy, or like circular transactions, or like maybe think that, okay, that's probably like a giant accounting scheme to inflate their earnings and so on. At this moment, if that's the case, then they're probably going to be like maybe the biggest accounting like fraud in the history of the markets. So I think that there's certain possibility this can be the case, but like I think this chance is probably not that big. What I will see NVIDIA right now is like, for me, this company is like still okay. So they're still at the end of it, they're still a cyclical company, like just like all these kind of hardware play, like semiconductor players, like they always been up and down, up and down. So for me, like I'll say they're right now like, yeah, they're benefiting from this kind of like top of the cycle situation. But I mean, I think this will not be forever, because sooner or later, like the supply of chips will outpace the demand, and then we'll see probably NVIDIA like going down. But this doesn't mean that it's going to be a bubble. We will see, let's say, like a dramatic drop, like maybe 20% in one day. Probably going to be like a slower, gradual, drop in the price, I'll say. Because if we have to, I'm also looking like during the dot-com bubble, I mean, the whole idea of like we seeing a sharp drop, actually that wasn't the case. Dot-com bubble was more like a gradual slow like drop in the valuations in the stock prices, not like a dramatic drop. Only this like a biggest drop, one day drops of S&P 500, for example, like none of them was like, they're mostly from periods like 1987, from COVID, but they were not from 2000. So which means that like we probably may see if something happens, like if we see AI winter or AI kind of like yes, like maybe drop down, we'll see it more as a gradual decrease, like gradually becoming less relevant in some ways. Or
I then also need to look at the other discussion point that comes with the whole idea, because I agree with you. Like when you see a bubble burst, it doesn't just happen overnight normally. I mean, a flash crash at 87 is very, very unlikely. If you look at the GFC, it took, near enough to 18 months for it to actually hit the bottom.
Yeah.
So again, on that point of view, we are now inches away from something like SpaceX, and SpaceX is going to be the largest listing in history. It's dwarfing what Aramco did when it listed a couple of years back for $39 billion raise.
Mm-hmm.
You were talking about, SpaceX is coming on with a $75 billion US dollar raise to be what looks like a $2 trillion US dollar company.
Mm-hmm.
So obviously XAI is in part of SpaceX. It's why I'm asking this question and where it is. When do we actually start to see from, your SpaceX of this world, your Anthropics of this world, your OpenAIs of this world, that there is actually going to be not just all of the excitement, not just all of the build, not just all of the change that's coming, but actual genuine profit? Because if you look at the IPO prospectus for SpaceX, the reason it's so valued is not to do with, XAI. It's to do with the fact that Starlink is this incredible technology around telecommunications and satellite. Without that, SpaceX and XAI is basically almost nothing. So my question back to you about, the value, and I completely agree with what you've said so far, but I just want to get you to go any further, is, are we again seeing a scenario where, just like in the dot-com bubble, companies are listing purely as a way to get on the off-ramp and extract all the value they can, and then sort of leave the investor holding the can? Or am I being a little bit pessimistic with that view?
I'll say, okay, yeah. I think at that point, I'll say we have to track where the money goes in this certain AI ecosystem, and if we see that the monies are still the money is still going, then should be okay. For example, let's say, I'm more worried. I know this. We have OpenAI, we have Anthropic, and so on. But what I'm more focusing on right now, personally for me, is that I'm focusing more on Google, on Meta, on Amazon, because I think they are the companies that kind of set the whole tone about AI investing, and the whole, because they spend a lot of money on capex, a lot of money on, they're basically the anchor, the anchor of the whole AI ecosystem. They spend the money, they give to NVIDIA gives to other players like memory and so on. So my concern, for example, when it comes to potential kind of AI winter, is all these companies, Google has their own advertising business. Meta also has advertising business, Amazon e-commerce. Microsoft has software business. So my biggest concern would be if if their businesses in some way start to feel kind of the slowdown, because we already see their balance sheets right now are, they're okay, right? They're okay. They can borrow at good rates, because their cash cows, their main legacy businesses, they're doing well so far. But what will happen if their businesses start to slow down? What will happen if instead of having a 15% growth of advertising, maybe we're going to see 3-4% growth of advertising? Then in that situation, probably companies like Meta or Google, they may not be able to have a lot of cash coming into their companies, and then they may not be able to spend too much for AI investment. Or if they do, they'll start to borrow more and more. But at this stage, we don't see at this stage they're still okay, but it's still is going there. But it's still not there.
Can I go a bit further? Because this is an interesting point, right? This is one that I know a lot of analysts in your world are looking at. I want to go a little bit further, because what you're also suggesting there is that if there's a threat to Meta and Google's traditional business model, which I agree is advertising revenue, search engine revenue, SEO, so search engine optimization, which has basically been the buzzword for the last 15, 20 years if you work in marketing. It's why they do so incredibly well with all that money you're alluding to. AI and the way the AI chatbots work is that you don't get exposed to that advertising dollar. Is that where you're talking about the concern is that if the model of the traditional software provider, Google
Mhm.
and also Meta, gets under real pressure from AI, how are they going to make that up? Because it's clear we're going all one way. We are going to start getting away from search engines and jumping onto AI bots. How are they going to monetize? That's probably my question I wanted to keep asking is there is still this big unknown that is a subscription model to an AI bot the way forward, or is it like what Meta and Google have shown for decades, which is no, it's the advertisement dollar. How do they get around that clearly impact on a very traditional, very cash cow, using your term,
Mhm.
business sense when AI starts really taking off?
I think for them, they already, to some extent, they already have started to implement like AI into their products, like the way how, like for example, like they do
Yeah.
advertising, targeting, and so on. We can see how like the whole advertising industry is getting more and more monopolized by let's say 2 3 players, and these are exactly those AI giants. And I think there's still a lot of like they can still squeeze a lot of this market share from the smaller advertisers, for example. So there's still a lot of market for them. But we all know that this can't continue forever. I mean, we cannot see like Google or Meta like being like having double digits revenue growth for the rest of the time. That won't happen. However, what they actually what but I'll still see them in a different situation. Let's say like OpenAI, for example, because uh these companies like Meta, Google, and if you actually have to see like their valuations or their are not very high, and like recently like their performance in terms of stock price is also not very spectacular, I'll say, because I think right now these players are more like a safe play because this is like kind of like a cartel agreement. Then they agree with probably with themselves and saying, okay, we're gonna continue investing right now because like if we don't invest, we're gonna lose. But then at some point, when someone stops investing, then others will also follow through. And then when they stop investing in AI, then the whole system of like like semiconductors, like memory, then they're gonna take the biggest hit. So, and for example, like also for the case of like OpenAI, I think this kind of like still improve business model. I mean, yeah, they're raising a lot of money, but at the same time, like it's they're on a different risk profile than let's say Meta or Google or Amazon. So for me, like when I don't know personally, like I cannot comment like whether I'm very sure bullish on a company, but like just like in every other situation, like in every other competition, like there will be winners, there will be losers, and like it's just like because someone will lose doesn't mean that the whole system will lose. Probably someone will take over. And then I think we as investors probably have to be able to try to see through like or try to make the smart bet on those who will survive or those who will win the race. So I think that's why I don't really put like let's say OpenAI or like the other like Meta, Google on a different. I don't put them on the same scale or same footing because like they're navigating a different situations. And I'll say like, but what I will see that like what I will say is that at the end of the day is like all this like how to say like all this bull market is driven by capex, and if this capex slows down, then that can people who are like the least prepared financially. I mean the players who are least prepared financially, they will be the one that will lose. And the players who are the best prepared financially, they'll be the one that will win. And we saw that in the 990 bubble, and we saw that like so I think it's I think it's a normal market movement like to kind of like the survival of the fittest. I mean, in some sense.
Yeah, I mean that's a fair way of saying it. It is going to be the survival of the fittest in terms of where it is, and that brings me to the next thing: is that I was going to get you to talk about
Mhm.
OpenAI versus Anthropic. There is signs listening to sort of Sam Altman that there is a bit of a crack in the way that ChatGPT is working. He has said a couple of things in the last month or so that suggests that they're not extracting the value that they would have thought to in this process. Where if you flip to the other side and listen to Anthropic, Mythos looks a little bit concerning in terms of a security reason, but in terms of what it's offering, it certainly suggests that there's other ways. With that sort of power struggle that you sort of talked about before, will we get to a scenario, in your view, a bit like Google, where in the end it won the search engine wars, inverted commas. Like, it is really the only one. Yahoo's gone by the wayside. AOL's gone by the wayside. And search engine optimization opportunity was really Google or nothing. Do you think that we'll end up just having one behemoth? I'm not saying it's Anthropic, but I'm saying, do you think that it will end up being a bit like the search engine craze, where there will be one winner and one winner only?
Probably, I'll say I don't think will be one winner, but it won't be like everyone going to be a winner. So there will be losers, but like I don't know how many losers we cannot predict. But the thing is that what we saw with OpenAI. I mean, if you think about like 2 years ago, like I think even 1 year ago, OpenAI looked like very invincible. Like everyone was talking like about them, and nowadays like they're kind of in this kind of spot, which shows that the whole kind of like development of AI is actually still in kind of early stage, where there is still a lot of competition. There is still a lot of like land grabbing kind of stage. So we still see kind of, I mean, in every kind of business cycle, we see like there are different stages. Like the early stages are mostly like, of course, like grabbing market share, very high revenue growth. And then later when we see consolidation, we see some players like falling behind. And then we see some players maybe buying other players. So I think what we see right now is like a typical very early kind of like business cycle dynamics with OpenAI, with Anthropic. Because at the end of the day, we also don't know even after 2 years whether Anthropic going to be like relevant or not. So it's, yeah, so in that sense, like, but that doesn't mean that there will be like a complete, I mean, like drop or complete like like disappearance. It's more like, I mean, it's like biology, like even all kind of like biological species, they do experience certain level of cataclysm in their life. So I think these kind of companies, they also probably going to experience something like that. It's just that, again, we need to bet on those that have the highest chance of survival, I guess.
It sounds like you're talking about what happened with the social media giants and the fact, you had MySpace, you had all those kind of players.
Yeah.
It's the same. What you're sort of alluding to is that it feels and has the same characteristics. It's the same cycle that Meta ultimately sort of end up winning.
Yeah. And also, if you think about like, because like also I just also want to mention about the back like the last decade, like that kind of like environment where people are investing in like in software stocks. That time was also, we had also very high valuations, and at that time also their balance sheets or their financial models were still not very good. But at that time they were still kind of growing at the very high levels, like top line growth, like maybe like 30-40% or above. And then like actually, and what we saw back in the days with these kind of software players is like they reached the peak maybe somewhere around like 2019, 2020, 21. And then we saw the bear market in 2022. So basically this kind of bear market in 2022 that we saw was basically like all these kind of like tech players that kind of like, I mean, we saw their valuation or multiples, like P ratio got compressed because we saw that companies like, let's say Salesforce, like those typical SaaS companies, like, I mean, they used to grow very quickly, but they can't grow forever, like with like maybe 30-40%. So nowadays they grow with maybe, let's say 10 or 50%, like much more normal growth. And that's why we saw their valuations going down. Ultimately, they didn't die a bit, but it's just that their stocks re-rate to a more proper kind of like multiple, I'll say. So
Yeah.
I think that's also
and a traditional company cycle is exactly what you've been sort of saying through the whole thing. Because as you said, Salesforce is a great example. Workday is the same. Is that they're now at their plateau phase. They're a mature business in the world of tech, and that's that's where we're at. And that's, again, I think your thesis is really interesting because you are saying that we are going through the upcycle in the cyclicality, like SaaS. That has just gone, inverted commas, through the SaaSageddon. The software companies have experienced this incredible sell-off because everybody's jumping out of them and jumping into AI. The final question I have for you then is, with the whole AI situation, is when do we actually get to that sort of peak? Because the speed at which it's moving is like nothing we've ever seen. Do you think that we will mature by 2030, as some people are talking about?
I think trying to kind of like try to pinpoint the exact time frame, it's hard, I'll say. But what if what, well, like there are things that like I'll be worried if I see them. For example, like way more IPOs. Like right now, like we see these big giant IPOs like they're 3 or 4. But honestly speaking, like I think the number of IPOs back in 1999, 2000 were much larger than nowadays. So I'll see like if I see more and more more like increasing reliance on like external financing or like equity financing or debt financing, then that would be some sort of like a warning sign. Second of all, what I want to see is that I also want to compare like 999, the role of the sell side banks. They were all, it was also quite important because back then, like a lot of these sell side players, they actually, when they did the IPO, they actually hyped the IPOs quite a lot. So I think this kind of like we don't see this kind of hype from the sell side nowadays when it comes to AI. And I think there is still a lot of skepticism, which is like still in a mainstream like public opinion, that now AI is still kind of like dangerous. So as long as we have this kind of like balancing opinion, I think that's okay. But once we see more like prevalent or absolute like kind of like consensus that okay, AI gonna be like the future and so on, then that will be more of a thing that I'll be worried. So right now we still hear very solid kind of like contrarian voices, which is a good thing, like kind of like keep the market into a proper kind of like sanity, I'll say. So if this is removed, then I'll be worried, like me myself will be worried. And then yeah,
I can't believe we've already come to half an hour, which means I have to ask the question that I ask every single one of my guests,
yeah.
which is, Peter Petrov, if you're in charge for just one day, what would you do?
Well, being in charge is a very top-down kind of like concept. So for me personally, like I'm in charge of myself. I'm in charge. Everyone is in charge of their own actions and their own, like motives. And that's what makes the market, the whole kind of like free market, exciting, because like they're a group of players. Everyone, like acts based on their own self-interest, based on what they think is the right thing to do. So I can't really say what, I cannot be in charge of other people, but I can be in charge of like my decision. Everyone should be in charge of their decision with their strong logical thinking and reasoning. But what I want to say, what I want to change is that like I think the current narrative is too polarized. Like people are either very black or very white, and then I think it's not only in the markets but also in society. I think like it's better. I think if I can have the power to change something, I probably would like to change the narrative to be like more nuanced, because like I think being more nuanced, more kind of like balanced would be better for society. It's also going to be healthier for the markets in general.
That's a very, very fantastic answer. Peter Petrov, it's been an absolute pleasure to have you on Exchanges.
Yeah, me too. Happy to. It's quite insightful. Thanks a lot for having me, and then hope to see each other soon. Yeah.